I was comparing renting versus buying versus having my money invested in the stock market, and the results shocked me. I also wanted to know that what is the rent amount that makes more sense to me to rent a property instead of buying a property, and what if I had my money invested in the stock market, what would be the outcome of it. So I had to compare 3 different things to find out what's the best use of my money. The results were shocking though. There's a powerful tool that helped me to compare renting versus buying while taking into account the money invested in the stock market at the same time. Basically the down payment money. This is the most complete calculator that I have ever used. We are about to find out which one made the most financial sense to me. Knowing where I can have my money invested helped me to avoid costly mistakes and potentially saved me tens of thousands of dollars in the long run. But before going through that, in order to support us to make more content like this, please make sure to subscribe to my channel and like the video. And if at any part of the video you need tailored answers to your questions, you can book a discovery call with myself using the link down below. So now let's begin with this tool. There's a powerful tool that I'll show you the fundamentals, and then you can use it yourself. The link to this calculator is down in the description, or you can simply go to armanigroup.ca and select this button. On the top right of the page, you click on rent versus buy, and there it is. This is your calculator. The way that this calculator works, it shows you the amount that if you can rent a similar home for less than this amount, it makes more financially sense for you to keep renting instead of buying and have your down payment or deposit money invested in the stock market instead of putting it towards a home. Here, because my market is Toronto, I'm gonna go based on the numbers that work in Toronto. But if you're, for example, in Vancouver and Montreal and Ottawa or any other town or city across Canada or US, you can use your own basically numbers in terms of buying, deposit, renting, and so on and so forth. Let's start with the variables. The first one is home purchase price. So average price of a 1-bedroom in Toronto right now is around $500,000, between $480 to $520. So average is around $500,000 for a 1-bedroom condo apartment. If you're looking for a 1+, then you're looking at $550,000 to $600,000, slightly more, maybe depends on the view, size, and location and everything. So I'm going with $500,000 as the purchase price of a condo. So I'll keep it like that. And if you can see, if you move around this toggle here, you can see it changes the value. So basically it calculates that with this purchase price and all other variables, this is the amount of rent that makes more sense for you if you want to rent instead of buying a property. So let's choose $500,000. Now let's go to see how long do you plan to hold on to your property. Real estate investment is a long game, meaning that if you are in it with, let's say, for example, a short-term goal in your mind, it's better not to enter it at all and better keep renting. But if you're planning to buy something, it's better to be like 5, 10 or more years. So you can choose, let's say, for example, 10 years, how long you want to hold on to the property. You can choose, like, say, 5 years, for example, or 6 years. So I'm going to keep 10 years here. The mortgage calculation. So basically it says that the interest rate that you can get from a bank, of course, it depends on your income, your job. Sometimes you might need to go to B lenders. They charge you higher interest rates. Sometimes you can go to one of the tier 1 banks and they charge you basically lower interest rates. So for example, right now, as the day I'm recording this video, like major banks are offering 5-year fixed terms under 4%. But for the sake of this video, I'm gonna use 4%. And the next one is down payment. Right now, with insured mortgages for first-time home buyers that can qualify, they can buy property with 5 to 10% down payment. But for this video, you can use any number, let's say, for example, 5%, 10%, or 20%. I'm gonna use 20% for the sake of this video. Next one is the length of the mortgage, which is basically the amortization. It's 25 years, 30 years, or anything that your bank offers you. You can easily play with it and select the one that you want, 25 years, 20 years, or 30 years. I'm gonna keep 30 years for now. This next part is super interesting and important, and also depends on your personal financial situation. First one is easy to find out. The first one is the home price growth rate. In Toronto, let's see if you wanna get an average price growth in Toronto. For now, I'm gonna show you a way for you to find out the price appreciation in your locale. So for example, in Toronto, what I'm going to do is that I'm gonna again go to the same website, armanigroup.ca. On top, there's this button. You go to Toronto Real Estate Market. You scroll down, it says Toronto homes, all property types. You pick the number that is the latest, basically average home price in Toronto. Of course, this is a combination of detached, condos, and like semis, townhouses, everything. But for now, for the sake of this video, I'm not gonna go too deep into the details. Of course, if for example you pick for example a specific neighborhood in Toronto, you can also narrow it down to that neighborhood as well. But for this video, because the viewers might be from anywhere, I'm gonna go with the average Toronto home price. So the average in end of February 2025 has been $1,084,000. This data is from 1995, end of 1995, basically January 1996. So I'm going to go pick, let's say, year 2000, February 2000. The average price of a home has been $243,000. So $243,000, let me do the calculations, and $1,084,000. 243,000. This is the delta, this is the gap. So now we want to know that how much appreciation has it been. So we divide it by the price at the beginning of 2000, February 2000. I'm using mouse here, so it's not that easy. Equals to 3.46. Multiply by 100, that gives you the percentage. Now, because from the year 2000 till now, it's been 25 years, I'm gonna divide it by 25 years, so I can get the average price appreciation in 25 years. So that's 13.8% price appreciation. I know that's insanely high. You may say, okay, I don't agree with that or whatever. Okay, that's totally up to you. Use any number that you want. Use 4%, 5%, 0%, 2%, minus 10%. Any number that you want, you can use in this calculator, it doesn't matter. But this has been the price growth, price appreciation. Even though we had ups and downs here, let's say in 2017, we had ups and downs here 2022, and then it went down all the way to $1,026,000 in 2024. We had lots of ups and downs here. So I'm just gonna use a super conservative number of 5% or 6%. Let's go with that. Again, you can play with it easily. You can choose, for example, home price appreciation of like 0% or minus 5%. You can say, okay, if my home loses value 5% every year, what will happen? So this calculator also can tell you what if your home loses value 5% every year. So what will happen if my home gains value 10% every year? So this basically, this calculator shows you what will happen if your home gains value 10% a year. So for the sake of this video, I'm gonna keep it at 5%, super conservative. Again, market has ups and downs. There's nothing guaranteed. It was just the average from 2000s till now. You pick the number that you want. I picked 5% for myself. Rent growth rate. So for example, if you're renting at this point, if you're renting at a property that was built before November in Toronto, I'm talking about this market Toronto, you can basically relate to the markets in your neighborhoods, in your areas, because you might have, any province has their own rent control rules and regulations. But here in my market in Toronto, anything that has been built before November 2018 is rent controlled. So meaning that the average rent control that the government of Ontario approved every year in the past 3-4 years, actually, it's been 2.5% rent increase. So I'm gonna keep it 2.5%. But if you are in a non-rent controlled condo apartment, for example, anything that was built after November 2018, your rent can increase 5% or 10% a year. There's no guarantee that that rent is capped and controlled. So again, for the sake of this video, I'm going to be super conservative. I'm going to use 2.5%, assuming that property that I'm renting is a rent controlled property. So there's not going to be huge rent hikes of 5 or 10%. So I'm going to keep it at 2.5% government rent increase guidelines. Next, you go to investment return rate. So for example, when you want to buy a property, as you remember, we chose that we are going to put 20% down payment for the property. So 20% of $500,000 is equal to $100,000. So if you put that $100,000 in the stock market, what would be your return? So for example, if you say, okay, S&P was returning, let's say 10% a year on average since 2000 till now, or 5% a year, or I don't know, gazillion percent a year, doesn't matter. You pick the amount of increase, the amount of appreciation or returns that the stock market gives you on that $100,000 down payment deposit. So you can pick anything. You can pick 5%, super conservative, you can go like to, I don't know, 20%, super basically bullish. So I keep it at 10%. I don't want to be super delusional in terms of stock market returns, because stock market goes up and goes down and goes up and goes down. So similar to any kind of market, similar to real estate market. So I keep it at 10% return on my $100,000 in the stock market every year. So next one is inflation rates. Inflation rate, you can get it from any kind of sources, for example, StatCan, or any kind of government website that tells you what's the inflation year over year. So inflation basically is the amount that your money loses value when it's sitting in a bank. So you can put the inflation here as well, basically use that data, whatever data that you need in this calculator. For the sake of this video, I will keep it at 2.5%. If I go higher, it would be different results. If I go super low, it's going to be different results. It's for sure it's not going to be 0%. And plus, I don't want to go into that topic. It's for another video. We have nominal inflation and we have actual inflation, which I don't want to talk about right now in this video. This video has different purposes, but I may talk about it in different video. So if you're an investor, you need to pay attention to the actual, not the nominal numbers that you're fed. All right, I'm gonna choose, let's say inflation rate of 2.5%. I think that's reasonable and super conservative, because we both know that inflation is not 2.5% actual inflation. So let's go to the taxes. Basically, you're going to have annual property taxes. In Toronto right now, it's about 0.65 or 67, something along those lines. It's less than 1%, but I will keep it at 1% for the ease of calculations. As you can see, if I move it down to, let's say, 0.6% or 7%, the calculations would be different. I'm going to bring it back up to 1%. Then you're going to have marginal tax rate, which if you're a first-time home buyer, probably most of your money is in your TFSA account, so you don't need to put that into account. Or again, talk to your accountant if you're paying taxes on your investments or the money that you're making elsewhere, whatever. So for the sake of this video, I assume that the money that you're investing or your other incomes, there already has been taken care of in terms of taxes, and you don't need to put that into this calculator. Otherwise, if you, for example, if you put your tax margin, it might change the numbers towards the worse. So at this point, let's go to the rest of it. Next one is closing costs. Closing costs are one-time fees that you pay when you're buying a property. So costs involved in buying a property, including land transfer tax and lawyer fees and this and that. So I keep that 1% at this point. And this cost is going to be spread over 10 years, over the time that you own that property. That's why this calculator shows it like that. So for the sake of this video, I'm going to keep it at 1%, because land transfer tax for the $500,000 home, you get rebates. And if it's Toronto, if it's Ontario provincial rebate or the city of Toronto rebates, if you're a first-time home buyer. So most probably it's peanuts for you, this land transfer tax and lawyer fees. But for the sake of this video, I still keep it at 1%, which it's reasonable. You can move it to, I don't know, like 4% or 5% or anything. But I'll keep it at 1% with all the tax rebates and programs and this and that. So the next is cost involved selling a home. So I also asked this calculator to give me a cost that involved in selling a home. For example, if you are paying commission later on to sell your homes 10 years from now, that also is taken into account, which most calculators online, when you go to their websites, you see that they don't tell you about this one. But I wanted to have that into account as well, to make sure that if I spend, let's say 4, 5, 6% later on in order to dispose basically or sell my property, what would that money look like in monthly terms, monthly payments that I would have? So this calculator also takes into account those calculations as well. So I'm gonna keep it 5% for now, the cost of sale. So with that being said, you also need to have maintenance costs, so which are annual renovation fees. For example, your dishwasher breaks, you need to replace it, or your fridge doesn't stop working, you need to replace it, blah blah, whatever. So you can take into account 1% for the maintenance fees. If you're living in a condo, that would be much less, because all the major things that are happening in a condo building are being taken care of by the property management from the monthly maintenance fees that you pay. So in my opinion, this is much less than that, maybe 0.5%. So I'll keep it in that amount, 0.5%. Next, you're gonna have annual homeowners insurance. So basic insurance, if you're, for example, if you have a car, you can bundle your insurance and it becomes peanuts. But again, it depends on your insurance, your policy, how much you're gonna pay. Is it like $1,000? Is it like $800 or $500? I will keep it at $500 or let's say $600. As you can see down here, you can see the amount calculated based on the actual purchase price of the home. So I'll keep it at $650 for the sake of this video, which is a decent, basically, insurance premium you're paying for a home. Next one, monthly utilities. So how much you pay for hydro and electricity, and for example, the home that you are paying right now, if you go and rent that home, you're not gonna pay that utility. So these are additional to your utilities. For example, if you rent an apartment, basically, and you need to pay hydro, so that hydro doesn't come here, because anywhere that you go, if it's a rental apartment, or if it's your own condo apartment, this is the same utility bill that you need to pay. For example, for internet, hydro. So this is just for those utilities that, for example, water, that's included in the rent amount if you go somewhere and rent. Next one is monthly common fees or condo fees. So for an average condo downtown that we're working right now, for example, around like $5.50 a foot, it's about 75 cents a foot. So for example, for a one bedroom, you're looking at between $400 to $450 monthly fees. So I'm gonna bring it up to $400 or let's say $450 additional renting cost. So if you're a tenant, of course, you're gonna have your own insurance as well. So for example, you have monthly tenant insurance as a tenant. So you can use that number as well. So if you're paying $40, $50 or $20, I'm gonna keep it 20, the cheapest, lowest insurance that a tenant, a renter can get out there. So all in all, if you can find a property to rent with this amount that I'm just gonna show you here, or the calculator shows you here, $1,168, it's better to continue renting. Or if you cannot find a property to rent, for example, a one bedroom condo apartment for $1,168, you might need to look or explore the options of buying a property instead of renting. So all in all, when you own your home, you have the freedom to make it truly yours. Paint the walls, change the floors, and for example, change the design or the space the way that you want. No landlords, no restrictions whatsoever. Hope you enjoyed today's video. Make sure you use this calculator, all different variables, and see what makes more financially sense for you.